Okay, hi students. Good afternoon. Okay, my name is Mingzhen Hu, and I'm the third type for the investment and the financing. So and I check whether the students online can hear me. Hey, students online.
Yes, okay.
Yes, yes.
Okay. Thank you. Okay. Oh, I continue. Now, okay. The last four sessions. Okay, Professor Yan Chen and Professor Qiling Wang. Okay, shared. Okay, there are the assessments of securities and the venture capital, right? So, in my part, I will deliver. Okay, there are two main dimensions of the investments and the financing. The first in this afternoon is the financial accounting, the basic conceptual framework, okay, of financial accounting. And then tomorrow afternoon, okay, we'll continue to learn, okay, how to analyze, okay, analyze the accounting or financial informations. So I want to know how many students, okay, have the basic foundation of the accounting knowledge or the financial knowledge before in your undergraduate students the stage, right? The financial or the finance or the corporate finance or the accounting. Yeah. Is any someone? Yes, I can. Okay. So in this way, before we do the right investment and the right financing decisions, we should know, okay, what is the financial accounting. The financial accounting can generate the basic information for us to do the to do the investment and the financing. So first, I will introduce, okay, the financial accounting, the conceptual framework. Okay, first I will do a brief introduction of myself. Okay, I'm a assistant professor, okay, in the Department of Accounting, and I'm also a member, okay, in European Accounting Association. And since my educational background, okay, I have a relatively abundant, okay, the educational background. So I know some in accounting and also in finance and the business administration, right? So I have learned in the City University of Hong Kong, China, right? And then, okay, other two educational background is in Huazhong University of Science and Technology, also the Wuhan University. That the both of the two universities located in Wuhan, right? So then, as for my teaching course, right? Okay, for our international students, okay, I taught the investment and the financing, right, and the other courses related to the corporate finance and the financial accounting. So as for my research interests, okay, I focus on the financial accounting and capital markets, also the corporate taxation, right, environmental accounting and management. So that's the brief introduction of mine. And then in this class, I will introduce this part, the financial accounting, the basic information and the basic knowledge of the financial accounting. Okay. First is the learning objective. Okay, read and interpret the basic financial statements. Okay, we can see that for every listed companies. Okay, every listed company. Okay, it should disclose its financial statements, right? So what consists of the financial statement consists of? Maybe have four main statements. You have a good. Okay, thank you, Pascal. Okay, thank you. And okay, we should first know the structure of the financial statement, and I will then introduce the statements of the financial information, like the Apple, like the Microsoft, also like Facebook. Okay, how to search the financial information in the on the website, and I will show in this class. And then, okay, first we show the needs of accounting, or why we need accounting. First, okay, we can see the stakeholders, like the managers, internal the firm, right? Investors, okay, outside the firm, and other internal groups want the answers to the two important questions. The first is how well did the organization perform? Yeah, if we have a perform or we operate organization, okay, how we assess the performance of the organization, okay, in a month, okay, in a year, right? So how well did the organization perform? That's the first question we want to know. Then is where does the organization stand? Yeah, where does the organization stand? Does organization stand for the state? The stand for the college? The stand for the individual investors, right? So we should know, okay, the two questions for the stakeholders, right? That's the needs for accounting. That's the needs for accounting. So the first question, we should know the situation, the situation, the assessment work. Then is we can assess, okay, the management, how the management can perform well, then can fulfill the needs of the people who they stand for, right? Okay. Then accountants, right? The accountants as for like my major, right? The accountants answer these questions with three major financial statements. Okay, three major financial statements. First is the income statements, right? That's the performance. Okay, the firm performance. Then it's the balance sheet. The balance sheet may report, okay, the financial situation of a firm. Okay, in the left side, okay, the balance sheet presents, okay, the asset, right? At the right side, okay, the balance sheet presents, okay, the liabilities and the ownership, the ownership of the firm. Then I will tell you, okay, the structure of the balance sheet. And the third is the statement of cash flows. The cash flows, like the money, right? So, like for the operations, for the investments, for the financing. So we can generate the cash flows into the firm and out of the firm. We should know, okay, the basic financial statements, okay, report the whole financial situation of a firm, right? Of a firm. Then it's a transaction, like the business transaction is every event that affects the financial position of the organization and requires recording. That we can see that the accounting, the financial accounting, not only just do the recording work, not only do the recording work, but also can supervise the behavior of the management, right? Because every economic activities can generate or can leave some records, right? So the financial accounting, okay, integrates, okay, the economic activity into the accounting words or the accounting language, and the accounting language is uniform, right? So we should know that accounting just integrates the records of the economic activities into the accounting words, so we can compare the accounting words between the two different firms, right? So the transaction, can change, okay, change the situation of financial, okay, the financial information. Sorry. Then first is the balance sheet. The balance sheet, we can see that the balance sheet is a snapshot of the financial status of an organization at a point in a time. Yeah, in time. That means we can define that, okay, in the fiscal year, yeah, the end of the fiscal year, maybe the December, okay, the December 31st, right? So we can see the financial status on the December 31st, right? That's like a snapshot. It's not a dynamic process. It's a snapshot, okay, at a one time point. Usually on a solid date, okay, it's December 31st, yeah, the end of each fiscal year, yeah, the fiscal year. So the balance sheet, okay, also called the statement of financial position or the statement of financial condition, that's the balance sheet, the definition of balance sheet. That means the assets, yeah, the assets, we know that an important accounting element. And the right of the equation is that the liabilities and the owner's equity. So the equation, okay, the equation, assets is equal to the sum of liabilities and the owner's equity, right? So why is true? Yeah, why is it true, right? Assets and the liability, equals to the liabilities plus owner's equity. But do you know why? Why the equation is right? What?
Liability is like minus.
Minus. Maybe you can change in another style or another firm, right? So Sophia. Okay.
Yes, sir.
Yeah. Okay.
For my understanding, I see the assets will be equal to the liabilities, because the liability like a fixed asset, land and building, maybe, which not movable.
Your answer may be close to the truth. The assets, not only the fixed assets, also some is the intangible and intangible assets, right? So why this equation is the foundation of financial accounting analysis. So we should know the logics behind the equation, right? So you just mentioned the assets, maybe the fixed, right, and then the liability or the equity. What?
Just mention only for the fixed asset.
Fixed assets, right? The fixed assets like the property, like the plants, right? Like the equipment, right? So, okay, thank you, Pascal. Okay, and this equation, why is it true? We can see the logic behind the equation is that every point have two sides. We can understand like this. We can see that one thing. First, the left side of the assets. One thing is the physical presence, right? The physical presence. We can see, okay, the air condition, okay, the laptop, and the blackboard, right? That's the physical status of one thing, right? But as for the right, okay, liabilities and the owner's equity, we put them together. Liability is the equity of what? Of debtor, right? The creditor, right? The creditor, or like the banks, right? Like the banks or the creditors, right? And the owner's equity is the shareholder, right? So we put liability and the owner's equity together. We can call the total equity. Yeah, the total equity, right? The liability that belongs to the banks, right? And the owner's equity, okay, that belongs to the investor, belongs to the shareholder, right? We put them together is the whole equity, okay, related to different stakeholders, right? So we called the equation, we changed the equation into another form, is that asset is equal to equity, right? The equity of different stakeholders, right? So the asset is the physical status or the physical thing we can see, yeah, like the air-conditioned laptop and the blackboard, right? And then the equity is the source, yeah. We should know the origin, right? The origin, because the air condition, okay, belongs to our college, right? Our business school, right? The laptop, okay, that belongs to you individuals, right? And the blackboard also belongs to our college. So the asset is the physical status of one thing, and the right, liability, and the owner's equity, okay, is the origins or the source. So that is the one thing. One thing presents in two sides, so we can understand that the equation like the oath, right? Every coin has two sides, so the equation is right. Okay, do you understand? Maybe the one thing, the air condition, the air condition, we can see the physical status, the physical presence, right, is the air condition, right? That is the asset, right? Okay, then the air condition that belongs to who, or to what? That belongs to our college, our college. So the college is the owners, right? The owners. So we can change this thing into two presence. First is the physical presence, then is the original presence, right? So that's the logic of the financial equation, the financial accounting equation. So the equation is right. Yeah, that's the logic behind, okay, the equation. Then we know the financial accounting equation. Then we see we can learn the assets, the definition of the assets. The first is actually the economic resources that are expected to benefit future activities of the organization. We know assets. Okay, the assets can benefit. Can benefit or can gain the money. Yeah, can gain the money, like air condition. Okay, it can service for our study, our work. Then we can create some new ideas and can do some achievements, right? So, and the other, like the equipments, or okay, the plants and the property, right, the PPE, right, the property, plant, and equipment can generate the new products, right? So that's the functions of assets. If an asset cannot generate some benefits, we cannot define the thing as an asset for a unique firm, right? So we should know their basic characteristic of asset. Asset. Then is liabilities. Liabilities are the entities' economic obligations to non-owners. To non-owners, like we. If I were a firm, right, that you are the investors or you are the banks, you can lend some money to me, okay, or you can invest your cash or your capital to me, right? So then you are the organizations or the individuals. I have the obligation. I have the obligation. If you were like a bank, right? I should pay back the capital to you and pay relative interest to you, right? If you were the investors, right? I should do some payouts to you. Some payouts to you. Then it's the owner's equity. Yeah, the owner's equity. So we should know, okay, the basic balance sheet is the asset equals to the liabilities and the owner's equity. Then the owner's equity of a corporation is called the stockholder's equity. Okay, we can also call the shareholder. Yeah, the shareholder equity. Okay, the stockholder equity, we can divide it into two parts. The first is the paid in capital, then is the retained earnings. What is the pay in capital? That if I want to finance or to gain to acquire some capital, yeah, then I want to to issue my shares to you, and you pay in the capital to me, right? So you are the stockholders, and the capital you paid to me is the paid in capital, and then I use the capital you paid in to me, right? You paid into me to operate, to do the investments, and then I can generate or I can generate the profits, right? The profits, then we put the profits to the balance sheet is the retained earnings. Yeah, the retained earnings. And if you paid in the capital to me, okay, 1 year, 2 years, and last for 10 years, okay, and then I can accumulate. Okay, I can accumulate the profits 1 year, 2 years, and 10 years, right? Then I put the 10-year profits together. It's the retained earnings, and the retained earnings finally belongs to you. Yeah, that's the excess. Yeah, that's the excess of your paid in capital. Yeah, paid in capital. So that's the owner's equity. Yeah, the owner's equity I mentioned before. Okay, first we have learned, okay, the equation of financial accounting, right? The financial accounting assets is equal to the sum of liabilities and owner's equity. Then we should analyze the typical the business transaction using the balance sheet equation. Yeah, the equation. First, okay, we do a King Hardware transaction. Yeah, the King Hardware transactions. I'll illustrate a simple, okay, the simple example. First is the initial investor by owners. If I were a firm, okay, you are the investors. Then you paid in $10,000 to me, right? The cash in cash, right? Then the acquisition of inventory. Then I used the 75,000 cash, okay, to buy the inventory. Yeah, buy the inventory like the materials. Okay, well, I want to do the production, right? Then the acquisition of inventory open account is 35,000, right? The merchandise costing $10,000 was sold on the open account for what? For 120,000, right? First is the conditions of this example. Then how can we put this, okay, this financial information into the balance sheet, right? First, we can see this in the first stage, like the first step. Okay, I received $10,000. Yeah, and you paid in $10,000 here. So okay, assets increase. Okay, 10,000, and the stockholders' equity increase. Yeah, 10,000. Right, and then we use 75,000 to buy inventory. So the first is the minus stage. Then is the addition, okay, stage. We can see, okay, see this. So we can see the equation is also, okay, true, right? And then we also, okay, the liability, okay, the liability, yeah, the acquisition of inventory on the open account, right? The open account, then liability, yeah, we have the 35,000 inventory, but I paid not. Yeah, I will pay maybe in a month or in 3 months, right? So the liability, that's the money that I owe to what? To the supplier, right? To the supplier. So this the inventory, okay, owed to the supplier, right? Then is the receivable, sorry, is the merchandise costing, yeah, and was so the open amount for that the fourth step is that the what, yeah, that's the receivable, yeah, the accounts receivable is the asset, right, and the also the increase of their stockholders equity, right? Then cost what? That is we, okay, the merchandise also like the product, right? The cost of the product, yeah, maybe $10,000, and then the revenue, yeah, the revenue we sell by what, by 112,000, right? Oh, sorry, it is 100,000 and 120,000, right? So we make the 20,000 profit, right? So since we have not learned the profit statement, so we first, okay, the profit together we can put into the equity, right? So okay, that's the receive, yeah, that's also we call the income, right? The income, right? This is the, okay, the expenditure, okay, we can also call cost, right? So with the profit is, yeah, $20,000, right? Then we put them together, okay, we put them together is the sum of the economic activities. Yeah, we change this slide, okay, present the economic activities, okay, independently, and we use the accounting words or the accounting language to put all the economic activity records, yeah, together. Then we do the calculation like this. So we can see that also the final, okay, the final result is also the same. The assets equals the sum of the liability, okay, 35,000, and the stockholders' equity 1,000. Oh, sorry, 120,000, right? So they are the same. Yeah, they are the assets equals to the sum of liabilities and the stockholders' equity. So this is the application of the financial accounting equation. Okay, assets is equal to the sum of liabilities and equity. Yeah, like equity. Do you have any question relates to the accounting equation? Online, offline students can put forward your questions directly, right? This is the fundamental knowledge of the financial accounting analysis. Okay. Let me check. No more question. Okay. Okay, we continue. Then, okay, we continue. Okay, the economic activities like cash collections of accounts receivable. Right. First is the 15,000, right? Yeah. Then is the cash payments of accounts payable. Yeah, the cash payments, yeah, is the 20,000, right? The cash payment for accounts payable. Then on March 1st, paid 3,000 cash for store rents for March, April, and May. Yeah, just one day pay cash for 3 months. Yeah, 3 months. The rent is 1,000 per month, right? Then is, we can see, okay, the continuous, okay, economic activities, right? First is the cash collections of accounts receivable. Yeah, the accounts receivable. That is the cash. Yeah, the cash increases and the receivable decrease, right? So the also is zero. Yeah, the equation is also true. Yeah, is also true. And then then the cash payments accounts payable. Yeah, the cash payments accounts payable, also the decrease of the assets. Yeah, the pay the receivable, then the liability decrease. The liability decrease. So pay the receivable. That means the decrease of the cash, right? The cash. And the liability we pay. Yeah, you lend money to me, right? I pay back the money to you, then I decrease my liability to you, right? So this also the equal, right? Equal. And then three. Okay. 3 cash. Yeah, so 3 cash. Okay. Also the decrease of cash, right? And the prepaid is 3,000. Yeah, the prepaid for 3 months for the next 3 months, right? So we put them together, the step 7 and the step 7A. Okay, they are also the same, right? And then is the expense. Why the expense is the 1,000? Maybe March. Yeah, the March, the cover the 1 month, right? The payment on March 1st, right? Okay, is in the scope of March, right? So at the end of the how to say at the end of the March, right? Okay, the expense can confirm the decrease of the cash, right? And we confirm the expense, right? Confirm the expense. So the expense, then also the stockholders' equity. Yeah, the stockholders' equity is the result of the profits, right? The result or the accumulated results of profits, right? So then we can see them together. That also the total calculations results from step 5 to step 7B. We can also see the equation is true, right? Combine the total and the total calculations of 5 to 7, also 1 to 4. Yeah, we can see they all the equal, right? All the equal. Okay, right. The assets is just equal to the sum of liabilities and the stockholders' equity, right? Then we just now, we have learned, the equation, the equation. Then we can see that the revenues and the expenses. The revenues are the increases in ownership claims arising from the delivery of goods or services, right? And the expenses are decreases in ownership claims arising deliver goods or service or use of the assets. That's the revenues that we gained from the operations, right? And the expenses that we paid for the acquisition of revenues. Yeah, so we should put them together. We cannot use one thing, valued 0, for some revenues, right? So if we get some revenues, we should burden the cost of some products or some services, right? So we should put them together, to make the business transaction, to make the business transaction activities into financial accounting records, right? Then it's the relationship between the balance sheet and the income sheet. Okay, just now the revenues and the expenses are 2 important elements. In income statement. Yeah, in income statements, you can see as the income statements measures the performance of an organization by matching its accomplishments. Revenue from customers, which is usually called sales, and its efforts, cost of goods are sold, and other expenses. So we can change a revenue and expenses in another way. Yeah, we call the revenue. We also call the sales, right? They are the same. Yeah. Then we call the cost of goods sold, and we also call the expenses. Yeah, expenses. So, okay, we put two statements together. Okay, balance sheet I just mentioned is a snapshot. Yeah, the snapshot. Yeah, at the end of the February, end of the March, end of April, end of May. Right. So we can see the balance sheet, balance sheet, balance sheet. Right. Then the change. Okay, the variation between two balance sheet dates. Yeah, balance sheet dates. We call it the income statement for one period, one specific period. Yeah, the beginning state is the end of the February, and the final date is the end of the March. So the income statement for March can present the firm performance during March, right? Okay. Similarly, okay, the income statement, okay, for April and income statement for May. Yeah. So the income statement together, we put the three income statements together, 3, 4, 5, or for a quarter ended May 31st, right? Okay, 31st. So this figure presents the relationship between balance sheet and income statements, right? Do you know? Okay, the relationship. Yeah, the relationship. Balance sheet present a snapshot. Yeah, a snapshot condition, and the income statement presents the firm performance during one specific period. Yeah, so we should know the income statement is a dynamic. Yeah, dynamic. Okay, the dynamic reflection of the corporate, okay, activities, and the balance sheet is a snapshot. Yeah, it's a snapshot of a firm, okay, at a specific date. Okay. Then is the analytical power of the balance sheet equation. Yeah, the balance sheet equation can highlight the link between the income statement and the balance sheet. Yeah, the balance sheet. Yeah. Just now we learned, yeah, asset is equal to the liabilities and the stockholders' equity, right? Then this is not a dynamic equation. Yeah, not a dynamic equation. Then we change in abbreviation form. Yeah, assets equals to liabilities and paid in capital and retained income. Right. We just now I just mentioned that the capital in paid in capital and the retained income are all the important parts of the owner's equity, right? Then we change the form into a dynamic form. Yeah, the dynamic form is that, okay, the revenue can bring the increase of retained income, right? And the expense can sacrifice the value of retained income. So we put the revenue and the expense together to adjust. Okay, to adjust the change of the retained income. Yeah, actually, okay, it's the firm performance. Okay, from the beginning to the end of the specific year, right? So the last line, yeah, the last line is the dynamic financial accounting equation. Yeah, dynamic financial accounting equation. Then is the distinguish between the accrual base of accounting and the cash base of accounting. Yeah, this pair of concepts, okay, is very important for us to understand the financial information. First, we should know what is the accrual base and what is cash base. The accrual base of accounting recognize the revenues and expenses when they occur, regardless of when the cash is paid and disturbed. Like okay, you are the supplier. I'm the customer, right? So, okay, I bought something from you. Yeah, maybe something okay valued okay 100, right? 100 yuan, right? Then okay, I confirm the activity or the behavior of the buying, right? The buying. Okay, when the transaction is finished, yeah, it is finished regardless of the cash payment is achieved or unachieved, right? First, the accrual base, maybe the accrual base focus on what's on the rights and the obligation. Yeah, the rights and obligation. Yeah, yeah. Then, but the cash base of accounting recognizes the revenue and the expense when cash is received and dispersed. Yeah, that means that I confirm my revenue, not not by what, not by the actual economic activities, the occur of actual economic activities, but focus on the change of the bank accounts, right? The bank accounts. If the cash flow into the bank accounts of a firm, we call the revenue. If the cash out of the accounts, right, in a firm, then we call the expenses. That's the cash basis. As for the accrual base, is that accrual base, that means the obligation and the rights. Yeah, the change of the obligation and the rights. I'm the purchasing okay part, and you are the selling okay part. So we make the contract or the deal, right? Then we can confirm this transaction. But as for the cash base, only if the transaction okay is related to the cash, we can confirm related okay the cash, the revenue, and the cost. So this the two differences of the accounting calculations. Yeah, the accounting calculations. That's in China, and also in some emerging markets, or maybe like in your mother country, right? Okay, the accrual base, okay, are the basic, yeah, are the basic principle of accounting, financial accounting. Accounting cash base or cash base supplements, okay, the function of financial statements. Okay, this accrual base is more important in accounting subject, right? Subjects. Then is the major deficiency of the cash base of accounting is that is incomplete. That it fails to match efforts and accomplishments in a manner that probably measures economic performance and financial position. In this way, I will show a short video, okay, to you that mean know the accrual, yeah, the accrual method of accounting. Maybe can. Sorry. Can we see the right? Okay, should not that's it, right? So I can show in tomorrow afternoon, right? I will continue this part, okay? First is the information or the knowledge is mainly related to the public firms, right? Then is non-profit organization. Okay, that means okay, the statement of financial information, okay, maybe a little different from okay that okay statement for public firms, right? A statement of revenues, expenses, and change in net assets. We can we can incorporate in net assets, okay, like what? Like equity, right? Like equity. So that is net assets, the statement of activities, right? So that is the three object, right? The third objective is the accrual base and the cash base right? Then it relates the measurement of expenses to expiration of assets. Yeah, how to measure the expenses, yeah, of assets. First is adjustment to accounts. Under the accrual base of accounting, adjustments are used to record implicit, okay, transactions in contrast to explicit transactions that trigger nearly all day-to-day routine and entities. Companies generally make adjustments when they are about to prepare financial information or financial statements. Okay, I'll illustrate one example. Maybe the students online cannot see it clearly. Like change. Okay, have some instruments. Okay. You can see. Okay, the financial statement, we can see if we can we can, maybe some people cannot see. Okay, I will change another. The first, okay, like the time zone, right? Time zone like one, yeah. One, okay. If we can see in the time zone, right? Maybe the first is the first year, second year, third year, fourth year, and fifth year, right? If we can forecast the sum of benefits or the sum of profit in the following 5 years, if how imagine, okay, imagine this one is, imagine the total money may be the 100, right? So then we can see the for the whole, yeah, for the whole, sorry. Yeah. For the whole 5 year, yeah, the 5 year, if the total profit is 100, right? Then we can change the distribution of 100. On average, yeah, each year may generate 20, right? The 20 yuan, okay, the 20 yuan. But if one firm wants to get listed in the capital market, right? Then the firm should make the performance better, right? So maybe in this way, the firm reports what on average maybe, okay, 20, right? So 20, right? Yeah. So the sum of the revenue is 100, right? That's the average situation. if in the first year or the 2 year, the company wants to in the capital market, should be the listed firm. So if we, as we all know that a company want to get publicly listed in a capital market, okay, there should fulfill some requirements, right? The first is the performance, right? The performance, like the return on the equity, should be at least 6%, right? So if the firm want to get listed, then maybe in this way maybe this we can here. And change it another way. Fine. Then can also so we can see in this situation, we can see the result. So in the first 2 years, okay, the performance is very good, right? So the SEC or the investors, can see the firm is well performed. Then the firm can get the publicly listed in capital market, right? But as the whole profit is the 100. So after the firm get into the capital market, right? Then the potential, okay, the how to say, the following increasing potential, okay, cannot fulfill the next, okay, requirements. Then the third, the fourth, the fifth year, okay, the profit is bad, right? The bad. But then it's the earnings management. It's we call this is the earnings management. That is the firm A. That is the firm A. If we suffer another situation, that's the firm A, right? If we suffer another situation, okay, we call this firm B. The firm B the firm A want to listed, right? To be listed. The firm B want to save tax, right? The save tax, Then with save tax, we know that the profit tax, the income tax, the income tax is belonging to, okay, and relates to the performance of income, right? So as in China, the income tax for the corporations is about 25%, the 25%, right? So if a firm, okay, get the revenue, 100, the firm want to pay what? To pay 25, okay, 25 income tax, right? But the firm, we imagine the firm is now suffering serious tax burden. The tax burden. Then the firm want to save money in the firm, okay, pay less taxes to the government. So the firm may have the incentives to do the earnings management like this. Maybe like this. Save tax, okay, in 2 years. Listed after 2 years, in 2 years. In this way, maybe can change it another way. maybe 6, right? Maybe 7, right? If firm B, okay, want to save tax in the following 2 years, right? Then he can make the firm can make what to make the total, the total benefit together, okay, in different distribution like this. So in the first 2 years, since the revenue is negative, right, it is negative, it's below 0. So in the 2 years, the firm cannot pay $1, right, or one yuan tax, right? So as for this purpose, we can use in earnings management to avoid taxes. But for this purpose, right, can use the earnings management to adjust the firm performance, the revenue. So all the 2 conditions are right. Are right if the firm do not violate, okay, the regulations. So this is the proper way, okay, the proper way to do the earnings management. That's the permission. That's the permission of the financial accounting policies. The policies. So we can change properly, okay, according to the accounting principles to distribute, okay, the earnings in different year, or as for fulfill my purpose. Okay, the purpose whether it's to list it. So we should put the following year, okay, the following year's revenue better. And if you want to save taxes, you should pay the following the revenue, okay, negative. Then you are not required to pay the tax, right? So that's the earnings management. The earnings management. And the condition, the condition is that we should forecast correctly or clear or nearly, okay, to the true performance. So the forecast is very important to do the earnings management in the following years. The years. Then I'll show you some pictures, okay, and then it's the non-profit we just mentioned, and this we also just mentioned, right? The companies, Then is the principal adjustment. The principal adjustment is the expiration of the unexpired cost, recognition of unearned revenues, accrual of unrecorded expenses, and accrual of unrecorded revenues. We can see some that we can see that nowadays we can see that the digital the digital assets, maybe the digital assets, right? The digital asset is important to every firm, but nowadays, okay, by now, okay, no related or regulations on the measurement of digital assets. So we should know the accrual of some unrecorded information, okay, in the assets or in the liabilities or in the equity. Then we should know one conception, concept, is the depreciation. Then we can also see the air condition, right? The air condition, imagine the air condition, okay, the original value of the air condition is 5,000 yuan, or the 5,000 yuan, right? Then we should predict the length of the useful life. Then we imagine the air condition can be used in 10 years, right? Okay, 5,000 yuan, okay, in total. Then as for the street line depreciation, the air condition, the first year is the 5,000 yuan, okay. Then we divide into 10 years, and at the end of 1 year, at the beginning of 2 years, the air condition, okay, may be valued at 4.5 thousand, right? 4.5, just 1 year, 500 yuan depreciation. So should put the residue value. Yeah, the residue maybe the iron, okay, the iron of the air condition after 10 years, the iron can sell, okay, for just 2 or 5 yuan or 10 yuan. So that's the residue value, right? And allocates the cost of the equipment to years of the useful life. Yeah, useful life. We should know the depreciation. We can say that maybe every cell phone, you bought initially, yeah, is very expensive relatively, right? After 1 year, 2 years, though, since the existence of depreciation, right, the price or the true value or the net value of the cell phone, yeah, may be okay. Must be okay decreased, right? Okay, right. So this the concept of depreciation. Yeah, the depreciation. Then it's the natural of dividends and the retained earnings. Since we come before we come back to the learning objective 5, I want to illustrate some true financial information of some famous, the famous company in all of the world that listed in the United States, right? You can search in the website. Sorry. The website. Okay, since we have we have learned 1 hour. Yeah, we can have a 10 minutes break. Okay, 10 minutes break. And we come back to the class. Okay, and 20 to 16. Okay, yeah, 20 to 16. 10 minutes break. Okay, online students, please come back. Okay, I'll show the real financial statements of some famous famous. Oh, sorry. Yeah. First, you should see the official websites of the U.S. Securities and Exchange Commission. That's the official websites, yeah, of the listed firms. Okay, the information disclosed. Okay, in the website, we should know this is the website's address. Then, please see here. If you want to search the unique firm's information, first you click here, company feelings, right? Yeah, like this. And you can see company and person lookup, right? So you can click here, the name, ticker, symbol, or CIK. CIK means the label of the listed firms that are listed in the United States, right? Maybe you cannot know cannot remember all the CIK of the listed firm, but you can see their first week for Apple, right? Yeah, the Apple, you can see the Apple, yeah, it's the CIK here. You just see the keywords, okay, the keywords of the family name, Apple, yeah. We can see here. We click here. Okay, so the word slow. The EDGAR, okay, the EDGAR website, okay, is the comprehensive website that accumulates, okay, all the listed firms, okay, financial information, okay. Then, okay, so should present change another way. So the word, the network is busy, right? Change another browser. Try another browser. No other. Try SEC, yeah. Yeah. Company feelings. Yeah. Apple. You just tap here. You just click the Apple. Here and hey, Microsoft. Well. Sorry. Company feelings. You click it should be the you should type the keywords should be some for search, yeah. It may be the Baba, okay, Baba, Alibaba, right? Yeah, for search, yeah. No. Oh. Maybe the network is busy. Why cannot be here? if the Google cannot find it. You cannot use Google directly, so sorry, wait for minutes. Look for the change. Why? AAPP 嘛 ，AAPL 吗 ？Apple. Oh, sorry. Okay, then is the home page of the Apple, right? The Apple is listed in Nasdaq, right? Nasdaq. Then we can see the listed filings. Listed filings as the latest disclosure. Yeah, the disclosure or the 10K, the annual reports of the annual reports. We can see the fiscal year of Apple is the end of September. The end of September, not like in the Chinese listed firm are all in fiscal year on December 31st, right? The Apple, the fiscal year, what's the balance sheet date? It's the September 30th, right? The 30th. Then it's the 8K, 10K is the annual reports. It's the annual reports, and the symbol of annual reports. HK means the temporary. Okay, the temporary reporting. The temporary reporting. Okay. Then we can see the 8K and 10K. 10K is the annual reports, and the 10Q means the quarterly reports. We can see the latest, the latest annual reports of Apple. Yeah, this is the financial accounting statements of Apple. We can see this is the content, right? The content may have a lot of things. Okay, a lot of things. You can see there are several items. That is the 10K. For the fiscal year ended in the September 30th, 2023. The tables of content. First is the business, right? The business report the strategies. Okay, the strategies, the business modes, right? Then it's the risk factors. Okay, the firm want to put forward to the investors. Then it's the unsolved staff comments, unresolved staff comments that is released. The comments of staff, right? Such as the property, legal proceedings, and the mine safety disclosure. Right. Then we mainly focus on this. On this. This is the item 8. Item 8 is the financial statement and the supplementary data. Yeah, the 4 major financial statements and supplementary data, right? Then, the items 9, item 9A, 9B, 9C, that's the accounting policies. The policies the Apple used, to report, the financial information, like the control procedures of information. As for the item 10, the directors, executive officers, and the comparative governance. Yeah, the annual report not only present financial information, but also present non-financial information. Like the corporate governance. Like the governance, the governance rights distribution, right? So also present the director, executive officers, and corporate governance information. Then is the executive compensation. Yeah, maybe know the Tim Cook. Okay, how he earns every year, right? We can see here. And then is the security ownership of the certain beneficial owners and management and related shareholders matters, right? And other blah blah the information, right? As for the financial accounting, we mainly focus on items 8. Item 8. Okay, so we skip other parts and focus on this. Okay, then is the first we can see is the statement of operations. Yeah, operations we can see the sales, right? The sales or the cost, right? The cost, sales minus cost. Then we can see the operating income. Yeah, operating income. Then we eliminated the taxes, right? The taxes. Then it's the net income. The net income we also call what? Called profits, right? Called profits. Then we should know this is the statement of income statement. Then that we focus on the consolidated statement of the comprehensive income. Since the net income can be divided into several parts. Okay, we can see that then can your other comprehensive income, change in unrealized gains or losses. So these parts of Apple, okay, is relatively complicated compared with other firms. So we can see in this way, in this comprehensive income, we can put the income, okay, into several parts to do the analysis, right? So then we focus on you can see here, balance sheet, right? The balance sheet. The balance sheet, we can see the upper part. Upper part is the current asset. That's the asset, right? Current asset, non-current asset. We can see the specific items of asset. Yeah, maybe it's for the offline students. Okay, maybe the words is very small. You can also duplicate. Okay, to replicate my steps, right? We can just see the current assets incorporate consist of what? Of cash and cash in equivalents, right? And the marketable securities and also other the inventories, and they are all the current assets. As for non-current asset, sorry, I can also.
Sorry, Laoshi.
Hey, any question?
Yes, I sent the question text, but I'm still waiting for answers. I have a confusion of the precision.
I can't see your question clearly. I beg your pardon?
Yeah, I already added on chat.
What?
I have a question added on your chat box. So
in the discussion bar, right?
Yes.
Oh yeah. I see. Depreciation is commonly. Oh, sorry. I also okay. Can see it clearly. Yeah, Pascal. Okay. Depreciation is a common technical term used in asset valuation. Briefly, my question is, how do some fixed assets lose their initial value due to depreciation? A typical example of a house at a certain period of time may lose value while the structure has not changed, while on another hand, the land may increase in its value while building and the land all are fixed assets. Right, a good question. Okay, thank you, Pascal. As we all know, okay, I will introduce the attributes, assessment attributes, of financial accounting elements. Sorry, and in the attributes. The attributes. Okay, the attributes is the assessment attributes. That means we can see that we have a house. Yeah, the house maybe cannot the depreciation in the market, right? Now the house, like you mentioned, that a typical example of a house, yes, the house is very the house price, right, is very expensive in some first tier cities, okay, like Beijing, Shanghai, right? Okay, like New York, okay, like the developed cities, right? The price is raising, right? But this assessment attributes are the fair value. The fair value, or you can also call it the market value of a house. But in the accounting, we should focus on the account value, or we call the account value, or call the book value. The book value. As for the book value is the value in the accounts, right? For every house, for every houses, right? The house price may in the market, okay, the market price is raising, right, dramatically or slowly, okay. But in the book, in accounts, we should do the depreciation. So the value in book value, the value in accounts, and the value in the market are different, right? So different. We just to face with this condition, we have two solutions. First, we keep the value separately. Separately. We, as houses are all fixed assets, so we should do the depreciation. The depreciation maybe the building is old. It's old, and the desk and the air condition, okay, maybe all the compared with you bought it, right? This is the book value. This is the book value. But in the market, in the house market, the fair value, the market value, okay, it is increasing, right? It is increasing. So they have the value difference. The value difference. We keep the record separately. Then in China, the Chinese accounting standards, okay, require the accountants to keep the records in the records or the book value in the accounts. We regardless of how higher is the market value. The market value you can change it in another way. You can if you want to trade a house. You want to trade a house, then you can achieve the market value, right? Since I illustrate one example, okay, one house is 1 million yuan, okay, 1 million yuan, one house, okay, but in the book value, maybe what makes okay, how to say 1 million, okay, 0.8 million, okay, 0.8 million. So the difference is 0.2 million, right? 0.2 million. That the 2 million is if you have a house, if you are a firm, the firm want to sell a house, then achieve the market value, right? Is 1 million, right? But in the book value, the house valued 0.8 million. So in this trading, in this contract, you gain 0.2 million yuan. Just in the trading, you achieve the profit. You achieve the earnings. But if the house is not in a trading, then the market value cannot be achieved. So if the house are not in a trading, the book value, the market value, we kept the records back separately, if you trade the house with some money, right, with some cash, right, then you achieve 0.2 million profit. Yeah. So the market value can be only achieved in the trading. So in this way, we accounting will do like this. Do you know my answer?
Thank you.
Okay, thank you. Then is the we continue the financial statements of Apple. Okay, Apple first is the statement of the income. Then is the balance sheet. We can see the current assets, the non-current assets, right? The non-current assets may be the marketable securities. Yeah. No, like the bonds, like bonds, okay, like the property, plant, and equipment, PPE. We also called the long-term tangible assets, right? Also, other non-current asset. Oh, sorry, the current asset, right? The what? Non-current asset also. Oh, sorry. And the net, okay, we cannot see the intangible asset in the Apple's balance sheet, right? And then is the liability and the shareholders' equity. So assets equal to the sum of liability and the shareholder. We can see 2023 352 583, right? So the sum of the liability and the shareholders' equity is also 352 583, right? So then the liability, we can also divide the liability into current liability and non-current liabilities, right? And then the rest is the shareholders' equity, This is the balance sheet of the Apple, right? The balance sheet. The upper side, the upper part of the balance sheet is what is assets, and the down part of the sheet is the liability and the shareholders' equity. Then it's the consolidated of shareholders' equity, right? At the last statement of these cash flows, we can divide the cash flow activities into three specific activities. The first is the operating activities. The second is the investing activities. And the third is the financing activities. Since the theme of our IPCIE, okay, investment and financing, we focus on some specific investment activity, like the purchase some marketable securities that I bought. Okay, I bought some shares, some bonds, right, and some notes, right. And then proceeds from the maturity of the marketable, the securities. Also the proceeds from sales of the marketable securities. So these are all related to the investments, right? And the payments for acquisition of the property, plants, and equipment. And we bought some equipment, bought some house, right, for the operation, right, for the operation. But these are the investing activities, right? As for the finance activity, that's how to finance, how to gain the money from the debtor, okay, from the debtor, from the investor, right? And pay the interest, pay the dividend, okay, to the banks or their investors respectively, right? This is the financing activities. Then we put the three separate activity together is the whole cash flow activity. First is here. Then is here. And the last financing activity is here. So we put them together is all all the cash increase or decrease in cash equivalents, and the restricted cash, right? We can put them together. Okay, that's the main financial statements. Then is about some supplementary information. Now, maybe some notes. Yeah, some notes of the financial information. So if you want to see the keywords, maybe you say Tim Cook, right? Yeah, Tim Cook. Yeah. Okay, his executive. Yeah, we can see the executive officer. Yeah, the officers and the governance. We can see the information process or SEC. Yeah, we can see some in this one. Yeah, in this one, and it can be then. This is the index of the compensation. Yeah, the compensation. Yeah, here. Now this is the Apple. Yeah, Apple 10K. But we focus on another. Baba, you know, maybe Jingdong, Baidu. No? Okay, change another. Sorry. Maybe not. MIFT maybe better. BIDU. Yeah. Maybe change another way. Yeah. This is better. Alibaba, right? Then said that Alibaba was the address, okay, is in Hangzhou, right, in mainland China, right? But Alibaba get listed in the United States, okay, in the New York SE, yeah, New York the Securities Exchange. So we wait for a few seconds, then we can see the Alibaba's okay financial account information. Sorry, the network is very slow. Yes, we can change it. We can see can. Yeah. No. Okay. We just focus on Alibaba, but the network is very slow. So we focus on what with sorry, I changed the words in English. Okay. That is the Hong Kong China. Yeah, the Hong Kong exchange. We just focus on what on Alibaba, right? On Apple, we may focus on another. another important company, Tencent, right? The Tencent, you use the WeChat, yeah, the QQ, right? So the Tencent has the largest capital value, yeah, the market value, okay, in the Hong Kong exchange, okay, in the Hong Kong exchange. So you can see, yeah, the Tencent. We can see Tencent. Tencent here. We can see Tencent. Yeah, Tencent. Then we see the headline. Yeah, is mean. Oh, sorry. Then is the highlight is the annual report, financial statement, the ESG information, right? Annual report. Then we can see here. Yeah, search. Bye-bye, it's okay now. Right, it's Tencent, right? We can see the latest annual report of Tencent is like this, right? It's the 2022, right? You can see, yeah, the Tencent, right? The Tencent. Then we can see these are the Tencent, right? And the content here, the content like the corporate information, financial summary, and some basic information relates to the financial statements, right? And we can see the main information of the financial statements is here. Page 131, right? Yeah, we can see the comparative information of the 2 years, right? That the units of currency is RMB, right? You can see the first is the revenue, yeah, the profits, operating profits. Okay, then is the net profit. Okay, the profits to here. RMB, billion yuan, right? The billion yuan. So we can see the profit of the Tencent is here. Then we can see the consolidated, comprehensive. They put all the income together and put them together and divide into several parts. Yeah, divided into several parts. There is the balance sheet, or the financial position is the asset, right? The asset of Tencent, right? And non-current, okay, non-current assets and the current assets. Non-current like the property, plant, equipment, land use rights, right of use assets, construction. Okay, and these are all the non-current. So okay, Pascal. Okay, just you mentioned the what? Just you mentioned the house. The house. Some house we can put in the property, plant, and equipment. But some house we can put in what? In which part? Some we can put in. I can see in estate, right? In some financial assets and fair value, investment, intangible assets, and the financial and fair value through other increments, and then is the financial assets and the fair value through other comprehensive income. We can put okay, sorry, and you just mentioned house. The house, yeah, the house. You can some house if you self-used, you can put in this category PPE, right? But the house have the market value. You can put in investment properties. Yeah, so the investment properties, some of the investment properties can, since investment properties is unlike property, plants, and equipment, the investment properties are measured in what? In fair value, in market value. So if some house for business can be can be belonging to investment properties. Okay. As for this category of fixed assets, right, the depreciation can be not adopted, right? So that means the investment property, we use the fair value to measure those, not the historical cost. So they are different. Okay, they are different. Okay. Then the balance sheet, first is the assets, the non-current and the current asset. Then we can see the total is 15378, right? But there is the equity and the liabilities also. Put them together. Yeah, put them together is also 78 plus 36, right? Is like this. Total equity, total assets. So it's here. Total assets and equity is 3578. Also, the total assets 3578. So the equation is always true. Always true. And then is the consolidated. Okay, consolidated. And then some are the single. Yeah, some are the single statement of financial position. Some are the consolidated statements of financial position. What is the difference? Yeah, consolidated, that means the firm. Yeah, we can see the firm group. Yeah, the firm group. If a firm A has merged the firm B, firm C, firm D, so they put the four firms' financial situation together. Then we call the consolidated statements. But okay, but as for the individual, yeah, the individual statements, that means the single statement for firm A or the single statement for firm B. Okay, they are different. Okay, they are different. So the consolidated statement can reflect the controlling power of the parent firm, the controlling firm of the parent firm. Okay. That's the consolidated statement. Then is the change in equity. The change in equity means the variation of investors. The variation of investors means the number of shares held by the investors, or the name or the real entity of investment of investment change, right? So this one, and the last is there's also the statement. Okay, that is the cash flow, right? The cash flow is familiar with, it's similar to the Apple. So financial statements, also the operating activity, investing activity, and what? And the financing activity, right? Then it's the general information. It is a supplementary notes to the consolidated financial statements. We can see that the Tencent Holdings. Okay, the Tencent Holdings. We know it's a Chinese firm, right? We also know the Chinese firm that located in Shenzhen, right? In Shenzhen, China, right? But we can see in the general information, okay, the Tencent Holdings was incorporated in Cayman Islands, right? Why? Tencent located in Shenzhen, China, but the registered address is the Cayman Islands. Do you know why? But you can see also in Apple. Sorry, we can change another way. What is the brand of your cell phone? Like Apple, our Apple. You use the Chinese brand? No Chinese brand. Okay, so okay, and we can see use Xiaomi or Huawei. Anyone? So we can. Oh, sorry, we can come back to Apple. Okay, to Apple. Yeah. Come back to Apple. You can also see Apple. Yeah, you can see it's American company, right? But maybe Apple's registered address is not in America. And do you know the Meituan? Meituan? Yeah, Meituan. Okay, I will change you another Meituan. Okay, Meituan, also an important yeah, in Hong Kong exchange, right? Here, yeah, Meituan, the financial information and report, right? We can also see at Meituan, okay, Meituan, yeah, you may familiar with that, okay? And Meituan also listed in Hong Kong, China, right? Like Tencent, right? Like Tencent. We can see that in Tencent is a Chinese company, but the registered address is Cayman Island, right? Okay, just Apple. You can see the Apple. Address. No, your Cayman Island, and maybe also in Cayman Island. Not in Cayman Island. Okay, but we can see Meituan. Meituan here. Yeah, you can see. Can you find the Cayman Island? Yeah. Yeah, we can also see the register office is Cayman Island. We all know that Meituan is a Chinese firm, right? But the registry, the address is Cayman Island. Also Tencent, also the Cayman Island. Why? Why? Maybe you are curious about this question, right? Okay, and any people online may know the question? Why some famous internet firm, internet company, okay, in China, but the registered address is in Cayman Island? Yeah. Yeah.
Sometimes it's because Cayman Island allows them that when it comes to banks, they can have bigger transactions there.
Maybe can sell some bonds, right?
Yeah.
Maybe bonds.
The banks, the banks in Cayman Island. Like the central, like it easily save money in and out. So.
Yeah, your answer is close. Yeah, it's close to the truth, right? And just maybe okay, Cayman Islands. Okay, the registry, the conditions in Cayman Island is very soft. Yeah, it's very soft. So okay, but in mainland China and in other emerging markets, okay, the firm in some emerging markets, the business conditions or the business environment is relatively relatively restricted, right? Restricted, and the Cayman Island, okay, can how to say can send a lot of the tax benefit, benefit to these companies, yeah, to these companies. So there are a lot of the internet company, okay, choose the Cayman Islands as the registered place to save tax, to save tax, and you can see that this is in the IT industry, right? But in the different countries, we can see that you see that okay, there are some a lot of the Richmond changed their nationalities from France to Russia, to Russia, because the tax rates, the individual income tax rate in France is relatively high. It's relatively high, but in in Russia, okay, the individual income tax is about 13%. It's relatively low, right? Relatively low. So in a period, okay, before maybe 6 or 8 years, okay, some French rich people, okay, change their nationality, okay, to Russia. So it's very important, okay. So the location of the headquarters may be different from the registered address. You should know the difference. Yeah, sometimes mainly because the tax benefit, the tax preference, right? Also, the supporting policies. Okay, the supporting policies also the same. But in Cayman Island have another. The Cayman Island has another unique advantage. Is that can keep the secrets of some of the business information. Yeah, to protect us. Okay, the business information. Yeah. So okay, such as the Swiss bank, right? The Switzerland, yeah, the Switzerland bank, right? The bank, okay, in Switzerland, right? So they are so we can see the they have set the same similar, right? So this I should point that, okay, the headquarter location and the registered address may be different. Okay, may be different. So we can see these are the financial statements of Meituan. So here, but okay, the Apple just added here, and we just see up around. No, Baidu. No, Jingdong. No, so maybe the network is very busy. So we finish, okay, the illustration of financial information, and let's come back to the basic information of the financial accounting, right? The financial accounting. Just now we see, okay, we have a initial impression about the financial accounting information, right? Then we try to explain the nature of dividends and retained earnings. We know that the retained earnings is belonging to what? Is belonging to the shareholders' equity, right? And then we use some of the retained earnings as dividends to pay back to the investors. Yeah, to the investors. So dividends as the distribution of assets to the stockholders that reduce the retained earnings. Yeah, we use the part of retained earnings to make it as dividends to the investors. And the cash dividends are distribution of cash rather than other assets. And then the distribution is made possible for profitable operations. We know that an investor wanted to get exceeded, okay, the return maybe in 2 ways. The first is the buy in low price and sell in high price. So this is the first profitable method, and then is to acquire or receive the cash dividends. Yeah, the cash dividends. So an investor can benefit in 2 ways, but in common, okay, the dividend should be the main return of the investors. But the reality is that a lot of investors are claimed to be involved in high price purchase and low price purchase and high price sales. Use this way to make the abnormal return, right? Abnormal return. And return earnings. Return earnings is a result of the profitable operations. It's not a part of the cash awaiting distribution to shareholders. That means the out of the bowl, from the income sheet, from the income statements. Then we just know the difference between the dividends and the retained earnings. Dividends are the rest or a part of retained earnings paid back to the investors. And then it selects relevant items from a set of data and assemble them into a balance sheet, an income statement, and a statement of retained earnings. Yeah, we should select the items to do the analysis, right? Also, the same case, right? The income statements. Okay, the sales, okay, is 85,000, but the cost of goods is 70,000. So the gross profit is 15,000, and then okay, operating expenses use the rent, use the wage. Okay, put them together is 7.6 thousand, right? So the rest is 7.4 thousand. So this is the operating expenses. Maybe you should rent some building, rent some office to do the daily work, right? And we should pay the wage to the staffs, right? Then the net income, yeah, the net income. Then the statement of the retained earnings, yeah, the retained earnings, we can just see the last year, the retained earnings is the accumulated profit, right? Maybe, for example, is 19,000, and the current year is 7.4 thousand, right? So is what, yeah, is the sum is the 26.4, yeah, thousand. That is the accumulated retained earnings in the current year. Then pay out the dividends then the rest is the retained earnings. That case reflects the association between the retained earnings and the dividends. Dividends is an important part of retained earnings, right? And then it's the balance sheet. That the balance sheet, we just see the cash, accounts receivable. That's the different item of the asset, right? The total asset is here. Yeah, it's here. But in the the liability and the stockholder equity also is here. Yeah, it's this, right? So we should know the retained earnings, put all them together, and this slide, all these slides, I will deliver to Sophia one, okay, and she will share to all of you later, okay, and you can see the details, okay, after the class, okay. In the class, I just point, okay, the key items, right, key items here. And the learning objective 7, okay, to do the financial accounting information is about distinguish between the reporting and the corporate owner's equity and the reporting of owner's equity for partnership and the sole proprietorships. Okay, so we should distinguish, okay, the different investors, these different investors, sole proprietorship and the partnerships, yeah. A sole proprietorship is a business entity with one single owner. Yeah, one single owner. Yeah, I have no partner. Yeah, I have no partner. Yeah, so I invest in one company and I manage it. I operate. Okay, and the partnership, yeah, is an organization joining 2 or more individuals together as co-owners, right? Comparative of owners' equity reporting, right? This can see. Owner's equity for a corporation, yeah, the first is the total of the stockholders' equity, right? And then is, yeah, one owner, yeah, needs he, okay, shareholder, yeah, the shareholder. But for the different owners, for the co-owners, yeah, they share, okay, on average, okay, based on the investments, okay, they paid in, right? They paid in. So this is the difference between one single investor or 2 or more investors. Okay, That is the very important principle. The generally accepted accounting principles. That is the standards or the principles that the government or the other committee or other organization to regulate the disclosure of financial information, the financial information. So accounting is based on a set of principles on which there is a general agreement, not on rules that can be proved. Okay, that means all the information released into public should obey the rules of generally accepted accounting principles. Yeah, the general accounting principles are maybe to some extent, okay, like the law, right, like the law. So we should financial information should obey the regulations of GAAP, right? The GAAP. Then it's the concept of audit. Yeah, what is audit? Yeah, maybe someone knows the audit. Okay, audit is the accounting of accounting, right? Yeah, we should know the accounting. The function of accounting is to disclose important financial information, but we cannot confirm the information is true. The information is relevant, right? So we incorporate auditing work to confirm the released accounting information is relatively true, is relatively relevant, right? So the auditing, we can change it another way, is the accounting of accounting work. Yeah, to supervise, okay, to monitor, okay, the process of accounting work, right? The accounting work, because accounting work is to disclose the important financial information, right? We should confirm, to supervise and monitor, okay, the truth and the relevance of the financial information. So this is the main function of audit, right? The audit. Yeah. So we can see audit is an examination or in-depth inspection of financial statements and company's records, and that is made in accordance with generally accepted auditing standards. So the generally accepted auditing standards also it has the similar function with laws, right? That is the accounting setter standards. That means the GAAP, right? The US GAAP, maybe in China, the Chinese GAAP, we call it the CAS, the Chinese Accounting Standards. But in the United States, okay, the United Investor called the generally accepted accounting principle. So they are the same. So, but the organization issued the GAAP. We call it Financial Accounting Standards Board. Yeah, the Financial Accounting Standards Board is a primary regulatory body over accounting principles and practice and in the United States. But some students may be curious about. Okay, you just the teacher you just mentioned the Chinese, okay, the United States. But as for my home country, okay, my country, okay, we call this maybe okay. There are over 100 countries. Okay, 100 use this. Okay. We call the standards. They call it the IFRS or called what? Called IAS before 2002. IFRS. Yeah. That means IFRS is International Financial Reporting Standards, and this one is the International Accounting Standards. Okay, over 100 countries and regions, okay, adopted IFRS or IAS. Yeah, IAS. In China, The Chinese CAS, okay, the Chinese means CAS, the Chinese accounting standards is incorporate with what with IFRS, but in maybe in what in 80% parts, but in China there are several parts. Okay, China has unique regulation. Okay, but in the United States we call the US GAAP, right? Generally accounting accepted accounting principle. Then the organization, okay, the setter, yeah, we just mentioned the setter, yeah, the setter is IASB. That means the International Accounting Standards Board. US GAAP, okay, the setter is what FASB. That means the federal accounting standards board. But in the Chinese, it is what? Yeah, but in China, okay, which organization issue the Chinese accounting standards may be different from the United States and internationally. Okay, it's the Department of Public Finance. Yeah. Okay. It's the Department of Public Finance. Yeah. That is the government sector, right? It's a government sector. But IASB and the FASB are the common organization. We should know this. So, as financial accounting is relatively mutual, a mutual, okay, major, okay, relatively compared with other business administration like marketing, like the human resource, okay. But the financial accounting is relatively a mutual, okay. A mature discipline, okay, mature discipline, because this okay have a lot of regulations. We should obey the regulations. So we have not many, okay, adjustments, okay, adjustments to do the creation, right? The creation. So we should obey the rules. Okay. That's the part, okay, the accounting setter standards, right? Setter standards. So yeah, the FASB also in China, the Department of Public Finance, or in the international countries or the regions, okay, the IASB, it consists of 7 full-time members and is the independent creation of the private sector. That's these members in FASB, yeah, can implement, yeah, or to write, okay, some rules, okay, to regulate, okay, the accounting activities. But these regulations or the rules should be proved, okay, in the capital markets. Then can be adopted in other listed firm in the United States, right? And then it's a GAAP I just mentioned. It is the International Accounting Standard Boards, right? Then we call it the IFRS, International Financial Reporting Standards, right? And by federal rule, the SEC, right? The SEC I just mentioned, yeah, the official website. Okay, I just show you in the website like the Apple, like Baba, like the Microsoft. Okay, in the official website of SEC. A government agency that has the ultimate responsibility for specifying GAAP for the United States company whose stock is held by the general investing public. So behind the FASB is the SEC. The SEC is the government sector, right? The government sector of the United States. Okay. Okay, since time is 10 to 5, okay, we have 10 minutes break. Okay, then we come back to the class for the last session. Okay. the day after tomorrow is Wednesday. Wednesday afternoon we have the practical part. The practical part will be delivered by Professor Ke Feng and me, right? So so we just coordinate the content of teaching, right? So maybe in the practical, or we also call the innovation and the creative, the creative innovation and the entrepreneurship part. Maybe more interesting, compared with the investment and financing part. You can try to do some innovation test or the entrepreneur. The practice in the class. Continue. Come back to the investment and financing. Since I just checked. A lot of many of students in this part have little have less knowledge related towards the investment and financing. So the content I adjusted to relatively easier compared with the content I prepared before. So I hope that you just know the key note or the keywords or the key definition of the investment and the finance is enough. It's enough. Then you can learn as your interest. You can learn after the class, but in class you should know the key definitions. The definitions or the concepts. Then is understand. Is understand how managers and investors can learn about the financial position, prospects of an organization from its financial statements. So first, we see that the financial accounting information, the disclosure of the information is the conclusion of their things or their cases happened in the past, right? So from the past, from the analysis of the past information, we can try to forecast the future. Forecast the future and assess the current situation. So then it's the learning objective 8. The financial statement describes the financial results of an organization consistent that allows comparison to historical codes, the results of the organization, and to the results of other organizations. Then is the financial reporting framework. We just know the basic information of the financial accounting elements, and the structure of the financial statements. Then we combine, some key content together and 2 points, the objective of the general purpose of the financial reporting. The objective, usefulness, and the limitations of the general purpose of financial reporting. We should know the financial accounting the financial accounting provides the information, but not all the information are useful. So we first should fulfill the usefulness of the information and eliminate the noisy information. Then the investors and other stakeholders can use the useful information to make the right decision. So as the production of the useful information, the financial accounting work should choose useful information to disclose. Then this useful information should be suitable for making decisions. So it is the words in yellow, right? Those decisions, the decisions like the buying, selling, holding, and the securities and the providing of the other loans and credits. So the general purpose of financial reports did not and cannot provide all the information. Because all the information, if financial accounting wants to collect all the information and disclose all the information should pay a lot of efforts, right? So we just this is the first reason. Then because all the information contains noisy information and unrelevant information. So this information is not useful to make good decisions. So we just use the information to be useful and suitable for making right decisions. That's the objective of financial accounting. Then is the reporting entity. This is very important. As we can see that in a trade, or in the trade, if you are the buyer, I'm the seller, right? So we want to do the financial accounting work. We should know the boundary. Should know the boundary. So you are the buyer. So the accounting for you is different from the accounting for me, right? So we should know the reporting entity, should know the boundary of the accounting scope. The scope. Then it's the underlying assumption. The underlying assumption means if we want to do the accounting work, we should make assumption that the entity is a going concern. It is the going concern. It's the consistent existence. Consistent existence of an entity. Why? Because if, like the air condition, right? If a firm has an air condition, if a firm has 1 year or 1 year life, if a firm has a 1 year life, so the air condition cannot be depreciated. The depreciate, if we want to make a depreciation for a fixed asset, so we should assume that the existence of the firm should be going concern. So this is the underlying assumption of the corporate financial accounting. This is the then another important content is about the qualitative characteristics of financial information. I just mentioned that the financial information, the objective of financial information is to provide useful information for making good decisions. So what is useful? What is useful, and which characteristics can be suitable for make good decision? We have 2 plus 4. We have 6 in total. Okay. The first is the relevance. The relevance. If we want to invest a firm, the firm is an IT or IT industry, IT firm, right? So we may focus more on the innovation ability, right? The patent application, right? On this firm, because the firm is the IT firm, but we may focus less on the media coverage, the media coverage to the firm, right? So we just focus on the core competing factors, relates to this firm. So this information should be relevant to the firm. Then maybe the information are less relevant to this firm, we may choose to ignore. So the relevance is very, very important. The qualitative characteristic of financial information. That's the first. Then the relevance has similar definition like the materiality. Materiality is the entity-specific consideration, and so the framework does not specify a minimum threshold. But for a big firm and a small firm, the big firm, the small firm, the maturity in the two kinds of firms, are different. Because like the Tencent, the Meituan, it's a huge IT firm, right? A huge IT firm. So the relevance Okay, maybe one firm. For example, one firm. The asset is it's 100 billion yuan or 100 billion. Well, it's a huge firm, right? But another firm, maybe the 1 million, 1 million yuan. So the two different firms. So the information maybe 1 billion. 1 billion for 1 billion trade or 1 billion beer for the 100 billion country. This beer is maybe normal, but 1 billion yuan the beer, to the 1 million yuan the firm. So it is a huge beer. Okay, the smaller firm cannot handle the beer. So we should the materiality is important to judge which information is relevant. It is relevant. Then it's the first qualitative characteristic of information. Then it's the faithful representation. That means the financial information should be provided to fulfill some characteristic like the complete should be the completed information. Because the information is involved 10 people and you just report 8 people, 7 people. So the information is it's not completed, right? Then it's the natural. Either the financial information should be provided natural. The natural, not a positive, not negative in the tongue. Not positive, not negative in the tongue. Then it's free from error or no error. No error. So that's the faithful representation. So the faithful representation and the relevance are the two fundamental qualitative characteristics of financial accounting information. So we should know this and understand that. Then it's the enhancing. Then there are 4 enhancing qualitative characteristics. First is the comparability. Comparability is that firm A's financial condition should be comparative. Should be comparable with the firm B. In the same industry. So we should fulfill the requirements. The requirements. Then firm A's financial statements in the past year, in the current year, in the future year, so can be compared. Should then that's the comparability. Comparability. Then with the comparison, we can do the assessment or can do the suitable assessment. That's the first enhancing characteristic. The first enhancing qualitative characteristic. And then is the verifiable. Verifiable means that the framework claims that the different knowledgeable and independent observable could reach consensus did not necessarily complete the agreement. So the verifiability of financial information provides assurance to users regarding its credibility and readability. But this information, financial information, should be accepted or should be understood by the related stakeholders. Because the investor A and the investor B in ordinary case in common cannot make confused with the same information. With the same information. So the financial information should fulfill the second, the enhancing qualitative characteristic. And the third is the timeliness. The timeliness because the information should be available to the decision makers in time to be capable of the influencing their decisions. And the last enhancing is the understandability, classifying, categorizing, and presenting information clearly and consciously. If one information can be provided in 10 words. You should not use the 20 words to present the information. So we should make the information understandability, not make it complex, right? Okay, so then we combine them together is two fundamental qualitative characteristic is the physical representation and the relevance. And the four enhancing qualitative characteristics is the timeliness, understandability, and the verifiability and the comparability, right? And how to judge which information we should make efforts to create, to provide. This we should use the cost constraint on useful financial reporting. The benefits of question. The benefits of reporting information should justify the costs to provide and use that information. Yeah. So if we use this information, can gain $100. Yeah, and the cost maybe $80 then is worth it to do, right? But we can gain $100, but the cost of collecting the data and disclose the data maybe cost for 120, 130, right? Then we have no needs to provide the financial information. This is the cost constraint, the judgment threshold, right? So this is the qualitative characteristic. There is the elements I just mentioned, like the assets. Okay, assets. In this, I want to imply that the resource controlled by a firm. If we change another word here is owned by an entity. Yeah, but this is controlled. May be not equal to owned, right? To owned. So the control reflects the reality, not the contract, right? The contractor. For example, if the air condition is belonging to the college, right? But air condition is in another college, in the other college, because since the air condition has 10 years life, 10 year life rights, but the air condition is located in another college 10 years. So the air condition is controlled by another college, but it's owned by our college, right? So as the reality is that the asset should controlled by other colleges. So we call the accounting entity. The accounting entity is the other college, right? So the controlled, may have the bigger scope of compared with the owned. This is the first element, asset. Then is the second element, liability. Liability is the present obligation. It is the present obligation, not the future obligation, not the past obligation, just the present or just current. Just current. Because you and me, right? You and me. I say. I will give you high marks, in this course, 1 month later. In this way, that is the future. That is the future obligation, not my current obligation. So this obligation this future obligation could not be classified in the liability. So we should know the key, the key meaning of liability. And then the equity is the difference between the asset and the liability. It's easy to understand. And then it's the income and the expenses. And the income can make the equity increase, and the expense can make the equity decrease. Okay, you just know this is enough. That's okay. Just one discussion. Okay, one discussion. Yeah. If we do the discussion, and after the discussion, we'll have finish this afternoon's class. Do costs incurred result in the control of resource? Entity is streamlining its operations. It decides to move one of its factory to Asia to reduce the operating cost, and is able to reduce future cash outflows significantly by doing so. Redundancy payments, we focus on this, were made to employees currently working in their present factory as a part of the relocation exercise. So the question is, should redundancy payments be recognized as assets? So the assets, we focus on the asset. The asset, the first is the controlled, right? The past event, the result of past event, and can generate future benefits. That's the three main characteristic of asset. So should be controlled by the entity. Then is the result of past events, and then is the future economic benefits can be gained. Okay. Then this question is the redundancy payment should be recognized as assets. Okay. Put forward your answer. Entity is streamlining its operations. Should it be recognized or not recognized? Not be recognized as assets. Redundancy payments.
It's still assets,
Yeah.
Yeah, assets. Okay.
Because it's still talking about the future.
Yeah, but it's still.
Yeah. The future, the future benefit, right?
Yeah.
This requirement is fulfilled, right? Then is controlled, right? The controlled by the entity, right? Entity. But the last requirement is the result of past event, right? But this redundancy payments, yeah, maybe paid in the future, right? In the future should should not be recognized. The redundancy payments did not give the control, control over a source, although it result in the entity reducing the future cash flows. Reducing its cash flows, and the entity should be recognized if the entity controls certain firm. That's the redundancy payments. Okay, not controlled by the entity, just for the staff, the employees. So cannot fulfill this requirement, right? This requirement. So, okay, that's all for today's class. Okay. And we continue to share the contents of financial accounting and financial analysis in the tomorrow afternoon. Okay, I'll see you tomorrow afternoon. Okay, thank you. Thank you. Hey guys, online. We finished the class. See you tomorrow afternoon.
See you. Bye.
Bye bye.
来的提问，你替，我应该会替吧？嗯？我等一下有点要弄一些东西。 啊？我等一下不确定。你几点用过的？